Hello friends, thanks for joining me again. I didn't actually have a video planned for today, but I have some spare time, so I thought I'd put something together and see what comes out. You're looking at my short chart at the moment. It's a normal chart. It's made on Microsoft Excel. It also includes daily short trading and short interest, or short positions that continue to be held. Just to quickly run through the chart, the price bars are as normal, apart from the hollow part of the bar like this. You can see here that part of the bar is hollow, and that shows gaps. You can see over here there was quite a large gap on that bar. Volumes down here as normal, and this is daily short volume here, and they're in exactly the same scale, so they're directly comparable to each other. You can see down here, this is the scale here for the volume, and on this side you have the scale for short interest, which is this yellow area chart. And short interest are short positions that continue to be held. There's also a wave over the chart. It's a bit like a point and figure chart in a way, where you need a certain value to be exceeded in either direction for the wave to change direction. And in this case there's a 3-cent wave over the chart, so price needs to change direction by 3 cents or more for a new wave to begin, and it's on a daily basis. Finally, you can see here the wave volume. This is the cumulative volume for each wave, so it's just adding up all the volume on a particular wave. Blue is the up waves and red is the down waves, and you can use these to compare directly against each other, an up wave compared to a down wave, and how much ground that wave makes to determine what's happening in the market. So you can see, for instance, there was a fairly sustained up wave here. This is how much volume was drawn out on this up wave here, and in response there was just 3 days of down, and it didn't make very much ground lower before a more sustained up wave came in, and then there was almost no selling pressure, just 1 down day. Now I've been following this chart since price was back below $2 quite a while back. It's a good chart to follow. I keep an eye on it daily. Now, here was where a 6-month result came out and price whipsawed up and down, and then price broke out above this level on this wave here. That's this wave volume. Now you can see down here there was a fair effort put in to moderate the price using short positions. Tom Williams talked about this on a webinar a few times, where back in the 70s the private trading syndicate he worked for would actually sell some of their holdings while they were accumulating to bring price back or to moderate the price movement, with the intention of frustrating particularly short-term holders who would sell, and they could recover the stock they'd sold to bring price back, with the intention of buying more at a lower level. This was some way they used to accumulate a position without pushing price against themselves too much. And I guess this is the more modern way of doing the same thing. Rather than selling some of your own holdings, you use short positions to achieve the same result. So you can see that through here there was an increase in the use of short positions, but if you notice through here, the same period, there was very little change in short positions held. And that's likely because those short positions were covered same day or at least the next day. They weren't being held. They weren't being used for profit on a falling market. They were being used to moderate price, in this case reduce the gains, and perhaps turn the stock around so that further accumulation could take place. And on this day here in particular, I had a look, there was 3.7 million shares sold short that day. That's this bar here. And the next day was 2.5 million. So through this little period here, there was 8 to 10 million shares short sold. If they'd all been held short, this yellow area chart would have been higher than 15 mil because it was already at 12. Just the fact that it hasn't risen at all or hardly at all suggests that these shorts were being covered almost immediately. The intention wasn't to stay short. The intention was to moderate the price. And eventually they did get it to turn around here. And you've got 2 days down and then a shakeout sort of bar. That's this volume here. So that was what they wanted. And you can see that immediately short trading eases. A little bit of a push down there, but nowhere near as much as previously when price was pushing higher. That was the effort put in to turn price around, to perhaps accumulate further stock. Price went up in response, which in some way helps to confirm the buying in the shakeout type bar. And then you can see that the effort is put in again to bring price down. That's here. But this time, the short interest does rise slightly. And if you look, this bar here had reduced volume compared to the shakeout bar, but it was still fairly high, higher than the previous bar. This was actually a test of the shakeout, if you like. If we have a closer look, you've got the body of the shakeout bar through here, and then this bar here has come back into the body of the shakeout bar and tested it for supply. And it's actually found less supply than the shakeout bar, but it was still reasonable. Higher volume than you'd really like for a true test. In response, price did move higher, which shows that there was buying on that bar, and then there was another test for supply, and this time, looking down here, volume was very low. Selling pressure was almost non-existent on that bar. The lowest volume for weeks. That brings up something interesting. There was quite an effort put in here to bring price down, and this time short interest went up. I'll suggest to you that during this down wave here, that very little supply was being drawn out, not enough to even cover their positions this time. It wasn't beneficial for them to bring price down. They weren't gaining any more stock. And in response, price is allowed to push higher because they weren't getting any more stock. So it looks like they've covered their short positions here, and since then daily short positions have been very flat, and you can see there's been almost no short positions at all opened. Perhaps a little bit there, but nowhere near as much as there had been previously. This little period here is interesting. This is a period of absorption. Now, volume is very high on this bar, but there was 2 large transactions off market that day, which increased the volume considerably, and without them, volume would have been below average. Not really low, but below average. So once again, there was still very little supply being drawn out. And then through here, this bar closed really poorly, and it looks vulnerable to the downside. You would have been a little bit concerned on that bar, at least on a daily basis. Remembering that price has been in an uptrend for some time, so you wouldn't have been too concerned. But if you were holding, especially for the short term, you would have been a little worried that price was going to come back. but price went up a little bit the next day, only a tiny bit on low volume. Very narrow spread on this bar, and once again it closed poorly. That's this volume here. The next volume is very low as well, closing poorly again. Remembering here, there's no downside follow through at all on any of those bars. Even though 3 out of the 4 bars are closing closer to their low than their high, and looking like price might come down in response, on every bar price maintained its level and easily remained above that bar's low there. So this is a good case of looking at what didn't happen to understand what may well have been happening and proved to be correct in the end. There was volume going through and price did not break down over all 4 bars. If price didn't break down and volume was still going through, then something was happening in the market. I'll suggest it was absorption, it was buying, it was accumulation of some sort, as much as they could get. But you can see that volumes were relatively low down here, so there was very little selling anyway. And in response, price pushes higher here. A little test for supply, it pushed higher again. An absorption bar, no supply, and then price is pushing higher again. Now, these 3 bars here, this one, and this one, was the recent pullback. The parent index, the XJO, came back to this level. This bar here is where price came back to. But you can see that on this chart, price only came back this far. It was still a decent pullback. There's a few people getting a bit concerned, but there was very little selling pressure in this market, and that kept prices relatively high. You can see they've gapped down on this bar and this bar, which was going to only benefit people, but then straight away price rebounded back, and where the offer had been restacked, the professionals in the market bought the offer and used that to their own benefit. In effect, this was used as a 3-day shakeout. And the first 2 days didn't really want to go down at all, and then it was rammed down a bit on the 3rd day, and you can see that short sales increased a little bit that day, which would have been probably at the open to gap price down here and then allow for some buying at the lows of the bar. Next bar up probably confirms that there was buying in that bar. Now price pushing above $5 here and above this high suggests the market is on its next leg higher. It'll probably be a leg something like this one, I imagine, before price comes back. Remember, whenever price makes reasonable gains, like this say, it will draw out some supply. The supply will come from profit taking from people who bought at a lower level, from short positions from people who believe the stock is now overvalued and will pull back, and from the left, if there's trading to the left, people who had been locked into a losing position often won't sell. It's a human emotion not to take a loss, but to hold on and wait for price to come back with the intention of selling at break even when price comes back. There is no immediate trading to the left here. There is a bit further back, but not immediate trading to the left. So unlikely that there's going to be very much supply being drawn out from the left here. But whenever price does make gains, short-term traders in particular will be encouraged to take profits from a lower level, and there'll be some short sales from people who expect that the price is overvalued and will pull back to some degree. So whenever price makes reasonable gains, you'll see supply being drawn out at some point. and that's why the market then comes back and tests for supply. It's a period of absorption, and in classical technical analysis it would form like a bull flag, and price would then accelerate higher from it after the absorption has taken place, and it's proven that there's no further supply to be drawn out, there's no danger. And just on that, when price does accelerate higher like this and then comes back to test for supply like this, the depth and the duration of the pullback in response can be used to judge just how strong the underlying sentiment in the market is. A deeper pullback that lasts for an extended period is far weaker than a more shallow pullback that is over and done with very quickly. In this case, price went up and there was a determined effort to bring it down, which we talked about before, and then price pushed away. And in some respects you could say that this is forming a bull flag of sorts, and then price has broken out the top, it's come back and tested the breakout, and then price has pushed away again. And this was in response to weakness in the broader market, and the professionals used it to their own benefit on this chart. And I expect that now price has broken out above this level. If that's sustained over the next few days, I expect price will continue higher. Okay, hopefully that was worthwhile. Thanks for your time again. See ya.